18.
53 points higher for the Nifty. The sensex is up 180 points. The Nifty, though, has given up its early morning gains, has moved into the red terrain.
115-point downtick on the Nifty, and that's almost a 300-point downtick that we are seeing from the top today.
It's been tricky, and today the mid-cap index is taking the biggest brunt, down over 330 points. The good part is at least some levels, 18,200, the recent low, is something that's holding at least for now.
It was a weak trading session. The Nifty ends close to around that 18,200 odd mark, and from the frontline index itself, well, the day belonged to the Pharma name. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the top headlines of the day. A volatile day sees Indian indices tracking weak global cues to close at over 1-month lows. The sensex and the Nifty fall close around 1% to around 2% odd. The markets underperform benchmarks. Bank stocks lead the fall while mid-caps get battered. Diagnostic stocks surge after health ministers meeting to review the COVID situation amidst the rising cases globally. However, players don't see a significant uptick in COVID revenues. Dr. Lal's Path Lab, Thyrocare, Metropolis, all of them gain big time in trade. Market regulator SEBI decides to phase out the share buyback from the open market in a gradual manner. Until then, a separate window will be created on the stock exchanges to conduct buybacks. SEBI chairperson says it will create a level playing field for all investors. Shyam Metallics gains 3% after it acquires the stainless steel maker Mittal Corp and draws up big capex plans. Meanwhile, Uno Minda closes flat after gaining a trade on the back of a technology alliance with Ascent Tech of Korea to develop wheel speed sensors in India. RBI Governor Shaktikanta Das makes yet another pitch against private cryptocurrencies, says that they will cause the next financial crisis, adds that the credit deposit gap seems divergent due to the low base. Well, here's what we have lined up for the show. In Market Opinion, we have Sanjeev Prasad, Managing Director of Kotak Institutional Equities, and in Big Corporate Voices, we have Ashish Gaikwad, Managing Director of Honeywell Automation, to talk about, spots for the exports in the global scenario. Well, it was a volatile day of trade, which saw the indices close at 1-month lows, courtesy weak global cues. The sensex and the Nifty, both of them down close to 100%, with the market breadth firmly in favor of the declines. The broader markets underperformed the benchmarks, with the Nifty Bank and the mid-cap index falling 1.5%, while Pharma and diagnostic stocks, well, they did pretty well. Reopening stocks, though, they slipped on the back of COVID concerns. Mangla Malu joins us to run us through a quick wrap of what went on in market action.
Well, it was a weak day of trade, but importantly, it was a weak, volatile day of trade. There was rise of fear, and it was rise of COVID fear as well. India VIX was the standout index that told you the story of the day. The Nifty meandered in a 300-point range, with the highs being just below that 18,500 mark and the lows being just above that 18,150 mark as well, which again is in the broad range of both the 50 and the 20-day moving averages of the Nifty. Talking about moving averages, the Nifty Bank, which had held on to the 20-day moving average, had now broken it in today's trading session and closed below that as well. The broader markets were telling you that there was weakness, weak internals, 5 stocks declined for each stock that advanced, and the mid-cap index underperformed both the Nifty as well as the Nifty Bank. The only index that stood its ground today was the Nifty Pharmaceutical Index, and a bunch of these diagnostic stocks that gained on fears of rising COVID cases in China. So just to name a few, we had Glenmark Pharma, Granules, Divi's and Cipla from the Pharma pack do extremely well. Diagnostic gainers for Metropolis, Dr. Lal and Thyrocare. But on the weaker side, we had all those unlocked stocks go back into, losing terrain. But these again are just fears. And as a result of which, we saw a bit of decline in Indian Hotels, Delta Corp, PVR, as well as Trent. It was a weak day. It was a weak, volatile day.
All right, Manglam, thanks a lot for that. Well, let's get you some market opinions. Sanjeev Prasad of Kotak Institutional Equities said that the market is in a consolidation phase and that the current market valuations are risk. About the IT space, he said that the sector remains under pressure, likely due to a recession in Europe. Let's hear him out.
market hasn't done much in 2022 also. So last 15 months, if you take, let's say from September end of 2021, it's been pretty much in that 18,000 plus minus range only, barring a bigger correction in May and June. People are obviously very worried about high inflation and high interest rates and so on and so forth. So market is as of now, in a consolidation phase. Valuations are rich. And the second thing which we have to figure out is, how long do the central banks, including the RBI, hold interest rates? So as of now, we're getting some comfort on the fact that inflation seems to have peaked in some countries, peaking in others. So hopefully, as far as the actual central banks are concerned, we are probably reaching terminal or peak rates as far as the current monetary cycle is concerned. Europe is going through a massive slowdown and probably will get into a recession also. If you look at the non-farm payroll addition in the US, that is still very, very strong at about 250,000 plus last couple of months. So clearly we're not gone to a stage where US is starting to feel the effects of the higher interest rates and so on and so forth, which means the central bank will have no option but to keep interest rates higher for a longer period of time to actually break down inflation expectation and particularly core inflation. So in that context, I would assume if you're looking at a slowdown in the US posed by the actual central banks, I suspect IT demand is not going to be strong, particularly the discretionary part of demand from customers.
Moving on to some more opinion, Arvind Sanger, the managing partner at Geosphere Capital Management, said that 2023 appears to be the start of a rocky note as inflation, slowdown and recession need to be taken care of for a new bull market. Let's take a look.
I don't think we get a new bull market until we get through this phase of inflation, slowdown, recession, resolved to a meaningful extent. I'm not saying that we have to come out to all clear, but I think it's a pretty good chance that we're at least going into a mild recession in the US. Europe is already in a recession. I think 23 is at least going to start out, in my opinion, to be a little rocky. But I'm hopeful that by the time we get to the second half, things will start to look a lot clearer. But in the meantime, it makes sense to be a little cautious.
Well, moving to the second headline now. Diagnostic stocks, well, they surged in trade today after the health ministers' meeting to review the COVID situation amidst rising cases globally. However, players don't see a significant uptick in COVID revenues. Ekta Patra is standing by to run us through with more details on that. Ekta?
Well, yes, a lot of these diagnostic companies are in focus on account of concerns now that COVID-19 cases are rising globally. I did speak to a couple of the lab companies, and as of now, they said that COVID-19 testing is still insignificant. There is no change in the curve. They do expect a possible increase in terms of the COVID-19 volumes only if in case there is hospitalizations or the severity of the cases rise as well. That one will assess over the next couple of weeks. Even if in case there is an increase in terms of the severity as well as hospitalizations and the volumes for diagnostic labs, the competition is so high that you're probably going to see, you're probably not going to see the volumes come in as significantly as we saw during the earlier COVID-19 waves. So that's the feedback that I'm picking up from diagnostic companies as of now. If you already saw their revenues with regards to COVID-19 testing in Q2, it has fallen anywhere between 80 to 90% on a year-on-year basis, or almost even 100% for some companies. Valuation-wise, these stocks have corrected significantly, but they're still trading at quite a premium on a one-year forward basis.
All right, Ekta, thanks a lot for that. Well, staying with this piece, the prices of active pharmaceutical ingredients, or API from China, have risen in the last 2 weeks by around 12 to around 25%. This according to media reports that say that the rise has been triggered by an uptick in the number of cases in China. Ekta, coming back to you once again with the likely impact for API companies.
Well, yes, there is an ET report which has indicated that the price of APIs from China have risen in the last 2 weeks anywhere between 12 to 25%. Now, one of the reasons is that China is reducing exports as domestic demand and consumption has risen due to COVID-19. Prices of APIs such as paracetamol, azithromycin have increased in the past fortnight. CNBC-TV18 has not verified this report independently, but we did manage to talk to a couple of API as well as pharma companies. IOL Chemical spoke to us a couple of key points that that they indicated was that the likes of ibuprofen and paracetamol API are seeing some amount of shortage in larger geographies where there have been COVID-19 cases rising, such as US as well as China. The shortage is not seen in India as of now. They expect an increase of around 10% in terms of prices in case the shortages do continue. For them in particular, they do have a certificate to export to US, EU as well as Latin America and Middle East, and they could probably benefit in case the shortages do increase or continue, and that would only be assessed in the next couple of weeks. We did speak to a couple of other companies, and their feedback is that as of now there's not a huge disruption in the prices or supplies. It's more likely to be a temporary disruption when it comes to APIs.
All right, thanks a lot for that, Ekta. Well, how is the pharma space expected to perform in 2023? Let's hear out what Sanjeev Prasad of Kotak Institutional Equities had to say on pharma stocks.
Pharma, honestly, you have to look at it on a more bottom-up basis. They have their own challenges. Many of them, US generic pricing, clearly there is no pricing power. You can make some money as long as you have a new product launch for it and you have some exclusivity around it, but that's about it. So, the stocks which you like in the pharma sector are more the domestic-oriented stocks because, you are seeing decent amount of, growth over there. Most of the at least the domestic part of the pharma company, that seems to be growing at about 10-11%, which is actually quite decent. And that's probably the business which we are much more excited about currently.
Well, the third headline now, market regulator SEBI has decided to phase out share buyback from the open market in a gradual manner. Until then, a separate window will be created on the stock exchanges to conduct buybacks. SEBI chairperson has said that it will create a level playing field for all investors. Yash Shane is standing by with all of those details. Yash?
Market regulator SEBI in its board meeting yesterday has thrown some important amendments when it comes to the buyback regulations. The big message which came from the board meeting was that the market regulator wants to phase out buyback through open market or stock exchange mechanism completely by April 2025. But in the meantime, regulations there, that is open market buyback, have been made more stringent, like increasing the utilization of amount earmarked for buyback to 75% from the current 50%. Tender route for buyback is the more preferred one for market regulator SEBI, and here some relaxations have come through this particular board meeting. I'll just name a few of them. Market regulator SEBI has allowed an upward revision in the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing draft letter with SEBI for such a buyback. There are more relaxations in the pipeline which would need a ratification from the Ministry of Corporate Affairs, and they are in discussion. That would be increasing the maximum limit of buyback to 40% of the paid up capital of free reserves of the company from the current 25%, and allowing net debt-free companies to have 2 buybacks in the same financial year. Apart from that, market regulator SEBI also spoke about the delay which has been coming in IPOs after the DRHP has been filed. SEBI said that the regulator can't be blamed for IPO delays. Many merchant bankers have been repeat offenders when it comes to not providing the appropriate information to market regulator SEBI, and now what will happen is that in case a delay from the merchant banker, the DRHP papers will be returned and will be disclosed on the SEBI's website. On increasing trading hours, interestingly, market regulator SEBI said if exchanges want to increase trading hours, they can go ahead and do that. There is no interference from SEBI, or there's no restriction from SEBI which stops them from doing so. Certain important large brokers will be given a status of qualified stock brokers. They'll have to comply with enhanced monitoring guidelines from market regulator SEBI. Onboarding of FPIs have been made easier. REITs and InvITs corporate governance norms will apply on them as well.
Thanks a lot for that, Yash. Well, time to slip into a short break. When you come back, we'll run you through the remainder of the headlines.